Hello and welcome back to Core Finance. I'm Matt Brown. I'm joined by Craig Erlam, and we're going to talk about the euro dollar. Craig from Oanda, what have you got for us on this?
Yeah, I think just something I wanted to highlight here really is we had the bearish breakout a few weeks ago now. We came back towards those kind of 116, late 116s, 116.80, 116.90. Found support from prior support. Also, we've got the 89 day simple moving average coming into play there as well. And we had a nice technical correction. We came back. We went through briefly the previous support, which can sometimes act as resistance, but as you can see, you put on that fib level from the previous high to the most recent low, and we ran straight into the 50 fib before rotating lower. So this looks like a bit of a bearish signal for me. I do still think there's more downside potential here, simply because we had the head and shoulders pattern, which was the original topping pattern, which came before the rising trend line breakout. We haven't seen a completion of the possible price projection from that neckline break, and that would therefore point to further break below the kind of 116.80s. That would take us below the moving average as well, take us below the previous low. And the projection it gives us brings us roughly down towards the kind of late 115s, 115.75, I believe. So that suggests there's some more of a correction to come, and with the next big technical leveling coming just below 115, you can see that prior support and resistance as well, and I think that's when we'll start to see a test of this. I think a correction's due, but this is a rally that's lasted since the start of the year, and I'm still remain a believer that we could see a positive end to the year for the US dollar. I think there's a lot of underpricing going on when it comes to rate hikes, and if what we're seeing at the moment with regards to Donald Trump talking to some very hawkish potential candidates for Fed chair, then that would surely, you would expect to help the US dollar. And then how much more can we price in tightening from the ECB? I think we're pretty much there.
Understood. And on the upside, potentially, if we do see euro strengthen, what key levels could we be looking out for?
Well, the most notable key levels will be those previous highs. It's those previous highs where we start to negate the head and shoulders pattern. We can go back to the 61.8 fib towards those kind of 119.30s, and the head and shoulders is still in play. We could even go as far as 120, and for me the head and shoulders is still in play. When we start to move above there, then that would make me start to strongly question it. But again, around those 120s, the ECB has shown it does get very nervous, and these ECB sources stories start to come out, and they become very dovish. So I think I'll be surprised if we do reach those levels before we do get a little bit more of a correction. Of course, we've got the ECB next week, so let's see what comes from that. But I think my gut feeling is that's broadly priced in right now. It looks as though the ECB are going to cut their asset purchase from 60 billion to 30 billion, extending to September, after which it'll probably fizzle out. But like I said, I think markets are all but priced in for that, so I wouldn't expect too much upside in the euro in that scenario.
Fantastic. Craig, thanks very much.
Thank you.